All right, good morning, trade pros. Welcome to Morning Market Update for Friday, October 25th, 2019. This is George from Trade Pro Academy. Hope you are all having a phenomenal day. It's the last day of the week, and there isn't really too much news flow over the last 18 hours or so since we last spoke. 24 hours, actually, since we last spoke. There is one big item, however, and that's Amazon. So yesterday at 4:01 p.m., Amazon released earnings, and they didn't really do that well. So first of all, let's go through the numbers and talk about it. So they reported $5.07 per share earnings versus 446 expected. Revenue was $70 billion on 68.4 of expectations. So you look at that and you say, well, George, it beat. How come it's down 6%? Well, the real reason it's down is that the guidance dropped. All right. They guided their revenue for the next quarter from 86.8 billion down to 86.5. So their expectation, hang on, guys. Sorry. All right. Just somebody called. The cleaners actually called and I had to let them in. So the expectations were 86.6 billion, but they're reducing their forecast for Q4 to be lower. And the problem with that is Q4 is supposed to be the big quarter for them, for retail business, because of the holiday season coming up. So that was disappointing. And in light of the higher cost that Amazon's incurred, they've spent a lot of money and their mission and their goal to achieve one-day delivery on all their products in all the United States and worldwide is their goal. So they spend a lot of money to build that infrastructure to make it possible, and their own transportation business as well as they're expanding. They're obviously resulting in lower earnings. So all in all, fell short. Q3 profit was 26% lower than it was a year ago. That's important because we look at a release according to an expectation. You say, hey, we beat. But how do you know that it's a beat? Because what an analyst expects could change over time based on market conditions and environments. And it doesn't account for the fact that quarter over quarter and year over year, the earnings are actually slipping and lower. So they're down quite a bit, 26%. That's what investors were really thrown off by. Net sales beat expectations, obviously. All right. But they're expecting a slowdown for the holidays. So that's interesting. In that note, Jeff Bezos is about to relinquish the title to the world's richest man back to William or Bill Gates. Shares are at 1637 approximately. At that price, Bezos has a net worth of 102.8 billion. All right, which puts him $5 billion behind Bill Gates, from who he took the number one spot in October of 2017. So I think Bezos is going to lose some sleep tonight. He's going to be, oh no, I'm no longer the world's richest man. What am I going to do with my life? He's not going to. He doesn't care about that. You don't become the world's richest man by trying to become the world's richest man. You do it out of passion and a mission, all right, and drive. And so I don't think Bezos is going to care too much, but it is a knock on Amazon, and it's pushing the whole tech sector lower. And the stock market sort of sitting there scratching its head. Hey, this isn't good. So now we're waiting for some more news. And I think today we get a bit of a consolidation day in the equity markets as a result. All right, so Amazon's down. Intel did beat up 4% on Q3 beat, and then guidance upside as well, or increase of their guidance. Visa came out with their earnings. They're up 1% and boosted their dividend also, which is great. Capital One Financial down 2.6% as delinquency rates increased, which is actually an important indicator for overall economic picture because Capital One tends to be a lender to people with credit problems or people who are looking to rebuild their credit tend to resort to Capital One. So if those people are increasing their delinquency rate, that could be an early sign that, borrowing is really becoming over leveraged here in the economy. And, it's not, don't take that as factual, do some research, but I'm going to do some research based on that. And it seems interesting to me, interesting enough to warrant an hour or two of digging deeper, as it could be something bigger overall. All right, today's markets in Asia, Japan's up 0.2%, Hong Kong's down 0.5%, China's up 0.5%, India's flat for the day. In Europe at midday, London's down 0.5%, Paris is flat, Frankfurt is down 0.2%. So you can see weakness across the board in European markets here. In European equities, in the U.S., Dow and S&P are flat. Nasdaq's up 0.12%, so marginally higher. Crude oil is down 0.2%. Gold up 0.2%, and Bitcoin up 0.2%. So if you can kind of look at this, we're getting a quiet consolidation sideways day, and that's okay. We can expect to see that as markets have been moving a lot in the last month and a half or so. All right. In the currency complex or the Forex realm, this is something that we're going to start to cover in the morning as well, some currency rates. The Euro USD, the Euro slipping versus the dollar, but not by much. Strong currencies right now are the Australian dollar versus the greenback, and the biggest gainer is the euro versus the pound. As it's not so much the euro appreciating, it's more the pound weakening as this Brexit fiasco carries on. All right, that's what we got in terms of economic calendar for today. Consumer sentiment due out at the top of the hour. Watch for that. That has the ability and potential to be a market mover. So that comes out at 10 a.m. this morning. All right, that's the University of Michigan consumer sentiment numbers. 1 p.m. we have the Baker Hughes rig count, which will impact oil. It's pretty much a look at the offshore drilling operations in the United States. Then 2 p.m. the Treasury budget. Right, not much in terms of economic news. The biggest one's at 10 a.m. Keep your eye out for that. Looking at the stock market at this precise moment, we have resistance up at the 12 to 14 area on the S&P 500 futures, not the index, and support right here at the 3,000. We've stayed in this 14-point range pretty much all in the overnight session and yesterday's session. So I'll tell you this, I have the feeling that we're going to need some news to support a drive above 3020. If we get above 3020 and hold that level and higher on the S&P, we're going to get a continuation in this rally. But right now, you're getting one positive event and one negative event. It's kind of tit for tat, and it's locked in and consolidating near an all-time high, which is not necessarily bad. I mean, it's still a bullish thing to be consolidating near the highs. But the longer we can't take out these 20s, the more buyers we accumulate at the top, which means the more sell stops we have at the downside. At some point, we're going to come down and take out all the sell stops, all right? Shake out people from the tree branches. Next week is a big week on Wednesday. It'll be the 30th. The Federal Reserve has their latest policy decision meeting. We think they're going to cut rates once, and then they're going to stop cutting them for the immediate future, all right? So I think we get one more rate cut. That's going to cause volatility. And at this point, I can't help but feel like traders are saying, look, we're at all-time highs or close to it. We can't break them, but the downside supported, so we're in a consolidation range. I'm going to sit tight and wait for the Fed, and that might be what just happens. The market may consolidate in a tighter range or tighter ranges until then. Be on the lookout for that. All right, appreciate you guys. Have a great weekend. I'm going to cut it short today. Be safe out there. Enjoy yourself responsibly, and that's what I got. Send you guys all love, joy, and happiness, and I'll see you on Monday morning for the morning market update. You guys take care. All the best. Manage your risk. Trade like a trade pro. Goodbye. I got to turn around and open up the trade room. Goodbye. All right. Trade pros. Looks like equities are getting a little bit of a hit here to the downside support of the range. Around 3,000 even. Let's see what we get. Pre-market weakness. I'm looking for some catalysts for this. There's some talk out of Russian central bank. Donald Trump, few tweets. Tesla said they're willing to share their intellectual property rights for their battery technology, which is kind of cool. SoftBank said they're doing a write-down of $5 billion onto equities or onto WeWork's company. And so, all in all, we don't really have a massive catalyst at the moment, but we do have the consumer sentiment numbers at the top, and I'll show you guys in a moment how to ride out this trend until then. All right, but first, let's send it over to Steven, and he will tell us a little bit more about oil and how that market's looking this morning, because it's starting to get a little more volatile.